This is going to be a brief trade review on both gold, looking at this area in here. And then after that, I'll jump across to NASDAQ and review why I took this long and what I'm expecting. And yeah, let's get into it. So it is currently Wednesday, the 17th of December during the London session. And if we're starting off in gold, I'll quickly give context of where we are at. So I just made a video this morning actually talking about the long I took from down here, which unfortunately took me out before it really ripped. But then you can see today on this new daily candle, we've opened up and we've just rallied straight into that previous day high. Smooth high is just above that potential target, but if we drop down a bit, we'll be able to see a bit of context of where we are at. So initially in this area, I was thinking we could take out these smooth lows and this long wick. We had closed the day right down here. And if you notice, we've actually got a manipulation closure right here as well, with the midpoint of this long wick being closed below, immediately reversing back up. That indicates a potential original consolidation. We then get that expansion higher and get a closure above the midpoint between these two liquidity pools. This is actually referencing on the 15-minute time frame, but even if we were to draw that up to there, you can still see that we actually closed this hourly candle above that midpoint. That simply indicates we're actually likely to continue higher, which made this a really good buying opportunity on this pullback. But I'm actually going to be looking at a short from this area, and I'll drop down to one lower time frame. So with this being the original consolidation, we then have that expansion and a closure above the midpoint between this swing high liquidity pool and this swing high. That told me it was likely to continue higher, but then it began selling off. And the reason why I was able to take a short in this area was actually because I recognized the market maker model framework. Drop down to the 5 minutes, be able to see it a bit more clearly. Excuse all the drawings on the chart. I also tried going short this morning right in the open, expecting this low to get taken out right away, and that obviously just squeezed me out, which was not ideal. But you can see if this is the consolidation, we then break the high right here and then put in a intermediate term low with this low, rallies higher, has a pullback, then we have second stage into the highs. On the 1 minute time frame, we can then start seeing a narrative playing out. You can see I've already drawn out a bunch of notes. But if this was the first stage, I can tell because we put in an intermediate term low, bit of a consolidation beforehand, making this a fractal. So if you imagine this being the consolidation, expansion, first stage, expansion, second stage, and then it makes a reversal after doing 3 drives into the high. When it's then sold back off, that made this a very key area to accumulate. But this short was based on the facts that we had a clear consolidation, a clear first stage. We then had a second stage, and all this time we spent right at a deep premium of the range gave the narrative that we were trapping traders long at the highs. On top of that, 2000 had opened up and then rallied to a premium. So above the hourly open, I see that as a premium. Below the hourly open, I see that as a discount. With how price rallied straight above the open at 2000 and then created a impulse low before ripping higher, that told me that anyone who was buying up here was buying at a deep premium. 2100 then opens up, works up to this line, which is based on the 15-minute chart. It's a old impulse high that we referred back to. So an old impulse high that made this big move down. We already took that out there. When we revisit that area, it becomes quite a sensitive area. And you can see that playing out right there. So I had that drawn out in the chart. That was one of the confluences as to why when I got this reaction, I then put the pieces together. I saw that we had the clear market maker framework. We had the narrative of us being held at a premium and then trapping traders long. And if we are trapping traders long, where are their stops? All the way down below the impulse low. This is referenced as a breakaway because the narrative of trapping traders up at the premium is especially in play when we get a strong break lower and then a failure to retrace back into that range. And that kind of indicates, it supports the narrative of traders who are buying up here not being permitted out to mitigate their position before price trades down to accumulate whatever sell side liquidity resides down there to load up on long position. So I expected this should remain heavy. I didn't enter immediately, but then when I saw this reaction from this high, I started dropping down. I trusted that we should continue selling off. Sure enough, get this nice push lower, retracement into the range, and then another low made. You'll see these lines drawn out. These are actually referencing the second stage impulse rejection failure framework that I've got, where you have a retracement going into first stage. First stage then breaks the low right here. We're then looking for second stage of the market maker sell model, which is that retracement. And then when that sells off and breaks the low, that becomes second stage complete. So price could technically reverse from here structurally. However, when it fails to do so, that a lot of the time indicates a more extended price run. You can see I have one drawn out here. The entry technique that I use down here to get in short is based on when we fail to reverse from the second stage. So we have this drop down below it. We fail to reverse. We then get a closure back below. That becomes the entry on that close. And then you go break even after 2 breaks of the low. So that's break 1. And then if we drag this down here, it becomes break 2. So I was actually able to sell on this candle. I was already in a position, but I added onto it and on this candle, held it, went break even right there at the low. And you can see that reverse straight back up from there. So that was really effective trading of how I was able to get positioned in case there was going to be a nice big run lower. But at the same time, my protocol for going to break even was able to actually protect me from taking any kind of a loss in the area. Then had the rally into the highs. So that's gold essentially. And what I thought was really interesting about it was just how there were the frameworks and the narrative for both the long and the short work together, where we had a clearly bullish market with the closure above the midpoint between these two liquidity pools indicating bullishness. However, on the low time frames, the price action and framework with the hourly openings was suggesting that we'd actually be selling off, and that ended up being a pullback to reaccumulate at a discount to then continue higher, as was confirmed when we closed above this midpoint. So that's something I can look for in future, is when I do see a closure above a liquidity midpoint like this that will suggest bullishness, to actually be waiting for that pullback into the range and trusting how the narratives work together with that give and take of the market. Because initially when I did see this, I thought, okay, this is looking like a long, but then internally I was a bit conflicted because I thought, well, actually the price action in here is kind of looking bearish. But now I can see clearly with hindsight how cleanly that actually played out. Going to jump over to NASDAQ now. So you see I'm still holding this trade. That's because this is my Swing account, and I am planning on likely taking a partial up here, but other than that, I want to hold. And this is a swing trade because of what I'll go over in a moment. You'll see this is actually on NAS 100. I'm using the CFD. But I'll jump over to the actual NASDAQ charts to do the rundown of, like, do a top-down analysis. But you'll see my executions in here, just buying essentially as we drop below some short-term lows in here, trusting that this balanced price range should remain intact. Looks like the internet just died for a second. There we go. But yeah, jumping over to NASDAQ, you'll see it's actually delays data here. I'm not paying for the market data subscription at the moment, so this is live data. This is like, I think, 10 minutes delayed, but for analysis purposes, it's perfectly fine. Weekly charts. The reason why this wick was of interest to me is because this is basically a weekly triple wick flip framework, which is a mouthful to say, but it's the antithesis of a wick rejection failure, which is essentially when we have a long wick that gets taken out, begins to reject. That candle right there should be very bullish the next candle. When that fails, that can either indicate very bearish price action, or if it fails but then climbs back above, that becomes a triple wick flip, which is essentially when a wick rejection failure fails, and now we're looking for that to act as support. So the narrative was that this weekly midpoint is a likely support level. Goes straight down to the daily time frame. A lot of time spent consolidating at this premium, and aggressively selling off into the range on a Friday, so creating that bearish sentiment going into the weekend. Then Monday sells off again. Tuesday continues selling off, but then what does it do? It hits the midpoint of this weekly candle wick. We also have, I don't know what this is. This is quite interesting actually. We have this old low, so I'll mark that out as such. We have an old daily low. After getting back on the right side of the curve, this long wick came down and took it out. And the reason why this one really stands out to me is because it's a very long daily candle wick. Anyone who was taken out, who had their stops below this low, like everyone's going to jam their stops up to this low here. We then accumulates below it, sell off well below it. Then once we get back above, this becomes a key reference point on the right side of the curve. This wick here on this daily candle, it drops down and actually goes below this old daily low. That becomes very significant. That makes this a higher probability to be used as a order block, which is why when it aligns with the midpoint of this weekly wick, as you can see over here, that becomes another confluence. When I got to the chart today, we had already sold off, made the low of day, and we're just consolidating within this range. Bit of a difficult day for anyone who was trading the New York session, but it gave a lot of clarity going into today, and I'm quite confident that we should be able to get a decent move higher, at least up to this old high, and hopefully up towards the all-time highs, since it is a swing account. Another confluence while I'm on the daily time frame is the fact that with this long wick, usually you want to see price get down to around the midpoint, and that's a very sensitive area. However, another way to use wicks is by measuring the willingness to reach the midpoint. When price actually fails to reach the midpoint of a wick, that's actually indicating a strength in the order flow. So that's another signature of strength right there, just that small gap between where we got to and the midpoint of that wick, which is why a very shallow wick on this next day makes a lot of sense. Might as well do the 4 hour as well. So this is the only time frame that's kind of a bit iffy for me, is just the fact that we have all of these smooth lows being lined up. Not sure if price maybe wants to run down and sweep those out once again, which is partly why I am considering taking a partial up here once it gets up there. This is a long wick as well, so what I'll be measuring is, are we able to get up through the midpoint of this range? When we do hit this high, I'll actually add an alert, and I want to be monitoring price around that point. Ideally, don't want to have price pull all the way back down against me, simply because of that trend line kind of narrative we have. But jumping back over to NASDAQ on the hourly time frame, we have a clear 3 drive into the lows on during the overnight session. So nice sharp sell-off, 3 drives into the lows. We then rally up. We had, I think, NFP today at 8:30 a.m. 9 a.m. creates a big up closing candle. Really obvious swing point for whoever was getting long for NFP. We then run that out with this candle here, creating a really long wick. We spend 2 entire hours, including going into the lunch hour, just consolidating above this long bullish rejection. So traders who see this, they think it's, wow, that's a very strong rejection. Great place to buy and put my stop below that low. Price takes that out, gets a very nice strong rejection out, and then just consolidates essentially into the close. On the 15-minute time frame, I'm on the right one. So the 15-minute time frame, this is where the narrative starts really getting obvious to me, and where I started getting very interested in this trade. So it already mentions that we had NFP at 8:30. We then engineered a really obvious swing low, enticed longs, a fake break above this high, big up closing candle, everyone buys. Aggressive sell-off takes out the low. We then consolidate, and anyone who was taken out or who was a bit frightened by that move will be dragging their stops or whatever, however they're looking to trade. But basically, liquidity is going to be building up around this level. Price spends a bunch of time up here to build up that liquidity, and then eventually drops down to accumulate all that sell side and then runs higher. This type of price action with these drives into the low shows really clear accumulation. And also the fact that when we returned up with this rally, you'll see that we kind of have these smooth highs up here. I say smooth, but it's more just, if you imagine a support and resistance trader, they'll be looking at something like that, thinking, okay, this is good resistance. Price is rejecting from these highs. And then what happens? A third time in a row, it rejects lower. So you can imagine on this drop down here, if there was anyone who was short biased, they'll be looking to continue selling. That's so I can then assume that because we're still in this area of accumulation, that as anyone is selling from this resistance level, smart money or institutional traders will be reaccumulating. If this is a previous area of accumulation, I expect this low to not get taken out and to act as a sort of an order block. So that was the logic behind this low not getting taken out. So what was the fact we've been consolidating all day, so this is becoming a bit of a balanced range. And if you look at this price action in general, if you imagine anyone was trying to shorten here on the higher time frame, where are they going to place their stop? Well, they're going to look for the next most obvious swing point, which to me is this high up here. Going into the close, we actually rally up towards that quite aggressively, but then at 15:45, aggressively sell off back into the range, and that is another confluence because we essentially already tripped in the high. We entice longs, but then when we sell off back into the range, we are selling off going into the close. So we're printing a long daily wick. There's going to be traders who see this and see that as a great reason to get short, meaning that when we do begin to squeeze, I can trust that it should really push into that high. The things that really stood out to me with this this particular chart and the reason why I put the trade on where I did was, one, we have this range from that high down to the low. I'm looking at around the midpoint. If I'm going to accumulate a position, I want it to ideally be around the midpoint, so there. So I'll make that just a white line like that. So I want to be accumulating around that midpoint of this balance range. The next thing that stood out was the fact we have this previous day low, and that resides around the same area. So that was a very nice confluence as well. I already mentioned that we'd enticed shorts with this drop down. So I assumed they would have accumulated in this drop down, meaning that this low should stay intact. And yeah, so drop into the 5 minutes. A lot of time spent down here below these lows. I see that as clear accumulation. I forgot to mention, we actually have very nice SMT on the lows as well. You'll see there's a bit of a big gap up here. I'm assuming rollovers just happened. So ignore the big gap. Just imagine that ES is actually lower down. But we did get some clear SMT between the London low and the New York low. You can see that really clear SMT right there. That was also a strong confluence that this could easily be a high time frame turning point. Where are we at? So this is the 1800 right here. So the new daily candle was just opens. Initially drops down into the range a bit, gets a rally, and then sells off below this low. So engineers an obvious low, rallies higher, spends some time up there, then aggressively sells off at 1900 into that sell side and right into that lower order block as well. Now I bought as it dropped down into this low, partly because it aligns with a swing point on this side. So I have to go down to the 1 minute to show that, which should be here. And this is a entry technique slash little feature that I've been paying attention to recently. I'm still trying to figure out a consistent way of using it. But it's essentially when we have an intermediate term high, which this is, so we've got a short term high on the left, short term high on the right, intermediate term high. We then look for the swing low that created the impulse leg that created the highest point of that candle. And in this case, it actually aligns with that green line. So that's what that is. Is at the same place essentially. But yeah, that becomes a potential key point of interest. And how how I'm observing could be a way to use it is one, price is likely to react from there and get back above it and then remain above. Or if that fails to happen, it could actually be a short. So let's say, for example, yeah, if price got below it, got back above, but then came straight back below, then that could potentially also indicate a short entry. But that is still something I'm kind of working on and trying to figure out if that's the right way to do it or not. But there was a confluence, and then we have the 300 sitting right here. I look for 10 and 20 points below. So 10 points below align nicely with this nice impulsive swing low. And because I was using a slightly wider stop down here below the midpoint of this wick, I was fine with just buying at the low of this candle, giving it that room. Now you'll see on my executions that I actually held through this entire pullback and then caught this run up. The reason I held was one, because this is my swing account. I specifically do not scalp on this account because I want to actually see how I can do with this. I've got a few other stocks on SHLS, so Visa and Intel. I only just bought Intel. Don't know. I'm not 100% on this trade, but you can see it's literally at break even right now. And Sedge as well. So Sedge could potentially come a bit lower, but that's essentially break even as well. But yeah, so I did recognize all these smooth lows through here. I actually did take a long on my scalping account as well, which I held up into these highs. And when it started selling off, I was like, okay, I'm just going to keep my stop loss where it is, hold through it. When it reversed down here, I got long on my other account again, and then I held that up into the midpoint between these two pools. So I only just got out of that before. So essentially, I have actually been paid on this trade already, just not in this particular account, which is partly why I'm very happy with just leaving it for now. Once we do tap this high, I will be then monitoring to see what we actually want to do, because if we hit this clear buy side pull and then show a strong reaction lower with these 4-hour trend line liquidity down here, I don't particularly want to just stay in the trade for no reason if it's clearly reversing. But part of the reasoning of staying in this area and actually buying on my other account is because we had midnight open down here. Now, because of the price action we had today, this clear consolidation, the narrative that anyone who is short have their stops above this high, everyone gets chopped up all day. And then we have the clear accumulation narrative down here as well. That gave me the indication that this could actually likely be a large range expansion overnight. And when that is the case, you want to be buying at or as close to midnight as possible. And yeah, potentially anticipating price should continue pushing. So I will be managing my stops at some point. I want to give it the opportunity to hit this high just first. And if it fails to hit that high and I need to leave the charts, I'll probably just take half off, because there's no point letting it come all the way back. But yeah, sorry if my thoughts are a little bit disjointed at the moment. It's almost past my bedtime. It kind of is, because I've been going to bed a lot earlier and waking up kind of around lunchtime with the New York session. It means that I get the mornings to myself, which, like, I'm a morning person, so getting up nice and early here in NZ and going for a run and getting into the charts really fresh in the PM session. I actually trade the PM session really well because of that, which is insane, because it used to be my worst session. But it turns out you just need that mental equity. So if there's a particular session that you struggle trading, you can almost bet that it's because it's at the end of your day. And on the other hand, London has become my not as good session to trade because that's just before I go to bed. But yeah, you can see the entry was bought just down below the swing low. We then have this consolidation and then nice expansion higher. Runs into the range, leaves a lot of smooth highs up here. That was very key to observe as well. And what you'll notice is the 2000 candle opens with no wick. It just rallied straight to a premium. The lowest hourly candle is the 1900 open. That becomes a bullish order block from the hourly opening price to the low. Draw that across and you'll find that the midpoint, which is right here, that's the mean threshold of the hourly order block. And you can see we respected that really nicely. So that was a good confluence. And the fact that we had this hourly candle with no wick and we drop below it, we not only hit the no wick, but we hit a swing point below that as well, right as the new hourly opened as well. So I saw that reaction out. We started pulling back. I was thinking, like, usually I don't like buying these kinds of trades, but the reason I don't like buying them is because I've been burnt so many times in the past during the New York session, buying these kinds of reversals that a lot of the time, look really tempting but don't work. However, they do tend to work when price is just being priced and doing what price does. During the New York session, there's a enormous amount of manipulation. Like, I mean, just look at this. Like, if you're trying to trade this, there's plenty of times where it looks really good, then it comes up for one more sweep or way deeper than you'd anticipate. And they like to make it pretty tricky. Whereas what I've noticed during the Asia and London session is a lot of the time these things that almost seem too obvious to be true actually are the real thing. They're the real deal. So I bought as we dropped into here on my MT5 account, and with a stop just below this low. We got this nice rally high, and yeah, closed a bit up here at this premium internal range high, and then the rest of it took off up here as we got deep into the range. But yeah, so that's essentially, that's the trade. As I mentioned, been a bit of a disjointed kind of talk, but I do expect that we are likely to continue pushing higher. If we do drop it back into the range down to the midnight level, I still want to see this low remain intact, and that could potentially be another really good buying opportunity. That, like everything on the high time frame, is set up nicely for a run higher. And in fact, if we compare, actually, I'll use that. If we compare this to US 500, I'll just do that. 1 hour time frame. We could then look for SMT and signatures like that for relative strength. You can kind of see ES holding up quite strongly. I haven't really looked at SMT, ES recently, but yeah, Nasdaq is looking good in this area. There is always the chance that it wants to come down to this low, of course, but you have to buy at some point. And if there is a dip, it's a very likely area for a dip to work. This area is kind of interesting because you'll see that we've actually got these perfect equal highs, and we then came back and tapped it with another perfect retest. So I was watching that down there. I thought that was quite interesting. That could be a reason as to why we want to return to that level, because when we have very smooth highs, very smooth lows, I see those as there's a lot of liquidity around there. There's a lot of buying and selling interest, people putting buying support, selling support, buying resistance, selling resistance. All kinds of ideas are going to be playing off that level. So a good chance price might want to revisit it. However, in the meantime, what I'd say is the most likely to happen is us to attack this really impulsive, obvious high. And the reason I say that is because we had this big consolidation at the highs. We left a lot of pretty smooth highs up here, aggressive sell-off. Then what do we do after the aggressive sell-off? We come back and engineer a really obvious buy side pull, and then sell off again after that. Anyone who was short in this area, they're going to want to trail their stop to that swing high. So that's why that is a very likely target for us to reach for. And if you imagine what it looks like right now, it would make sense for it to push up there. And that's a trade that is worth me putting on. And I'm working on trying to execute trades a bit more in alignment with the high time frame trend, with the expected daily expansion, rather than catching beautiful entries. So let's say I caught this move and I closed the entire trade right there. That'd be kind of a bit sad and disappointing. So what I want to start doing, because I'm pretty consistent with finding insane entries. I want to try and get better at actually holding the trades, because if I'm able to do that, the trades can go quite some distance. So that's kind of the game plan there. But that will do for this review for now. We'll see how this plays out. But in the meantime, I will essentially just be watching to see if we can hit this high. And if we can't, we'll potentially close one. But one of them for sure, I'm not going to touch at all. And it can stop me out for a full stop if it wants to. And that one that I leave on is going to be a swing position in case this is a longer term area for price to reverse from. But even if price came down and stopped me out for both of these for a full loss, I'd still be green on the trade thanks to the scalps that I took on the other account with the long from here and also the long I put on at midnight.